Mastering crypto trading, stop loss and take profit strategies. Hey everyone, welcome to Ideazoom Academy. Are you ready to master crypto trading and protect your investments? Today, I'll show you how to use stop loss and take profit orders to manage risk and secure profits in crypto trading. In the volatile world of crypto, prices can change in a flash. That's why having a strong risk management strategy is key. A stop-loss order is an instruction to automatically sell your cryptocurrency when its price falls to a certain level. For example, if you buy Bitcoin at $30,000 and decide you're willing to risk a loss of $2,000, you might set your stop-loss order at $28,000. This way, if the price drops, your position is closed automatically, preventing further losses. On the flip side, a take-profit order helps you lock in gains. When you set a take-profit order, you're telling your trading platform to automatically sell your asset once its price reaches your target. For instance, if you purchase Ethereum at $2,000 and aim for a 20% profit, you'd set your take-profit order at $2,400. This ensures that as soon as the market reaches that level, you secure your profit without having to constantly monitor the market. By using stop-loss and take-profit orders together, you create a balanced strategy that not only limits your losses, but also helps you capture profits. It's all about planning ahead. Use technical analysis to determine optimal price levels and adjust your orders as market conditions change. Always remember to test these strategies on a demo account before trading with real money, so you can fine-tune your approach without risk. If you found these crypto trading tips helpful, please like, share, and subscribe to Ideazoom Academy for more expert insights. Leave your questions or tips in the comments below, and happy trading!